Thank you so much for taking out the time. And it is a very critical time moment in the market. Geopolitical tensions increasing. US, Iran, lot of things. Prior to that gold rally, actual में क्या हो रहा है? What is there in base metal? What is the reflection of this kind of movements in the base metal you are expecting?
Yeah. Hi, Subrin. Thank you. I think now it's been almost 2 weeks. The geopolitical concern continues, and we are also seeing some ripple effect coming in. And very clear stance, what we have seen is the story is all about energy now, energy transition. हमने देखा कि crude oil prices moving to $110 in 2 days' time. I mean, if you recollect, oil prices were actually trading much lower and stable for last 6, 8 months. And all of a sudden, we have seen about 20, 30% rise. And it is all because of the supply tightness, which was discussed. The Strait of Hormuz will be stopped to, shipping the oil across the globe. And we have seen the reflection on oil prices. But the reflection on oil prices has a very cascading effect on the metal prices. And by and large, generally, जब geopolitical concerns, when we come across and see that, then you build a scenario called risk-off scenario. So in typical terms, अगर हम बताएं तो कि equity market crash हो जाना है, जो हुआ भी थोड़ा बहुत, एंड डॉलर ऊपर रह जाना है और बेस मेटल्स जो है मंदी में आ जाना है, गोल्ड सिल्वर जो है तेजी में हो जाना. So in general perspective, the risk of scenario means is that whenever there is a geopolitical concerns, your metal should fall. But जैसे हमने अभी बात किया, the way oil prices have gone up, and especially the war kind of situation that is going on in the Middle East, if अगर हम सब देखेंगे, aluminum price has just gone differently from any other commodities. It has gone to multi-months year high. So in perspective, Swapnil, अगर overall base metals का देखें, we will talk more about it, but they have gone little crazy movement. Aluminum has gone robustly bullish. Copper is become now resilient. It fell $13,500 से it came down to $12,600. But today morning, as we are talking, it is back to $13,000. So copper is still taking support from its long-term fundamentals. Aluminium has been hit by the energy cost transitions and shipping delays and exports from Middle East to other countries. And if you see other metals like zinc or lead or nickel, they are now into a situation of risk off. मतलब ज्यादा तेजी हो ही नहीं सकते हैं, थोड़ा बहुत लॉन्ग लिक्विडेशंस हो रहे हैं. सो दैट्स मोर और लेस बेस मेटल्स में जो इम्पैक्ट आना चाहिए वो हो रहा है, क्योंकि ये रीजनल स्पेसिफिक एक्टिविटी हो गया है. इसके चलते हुए हमको एल्यूमिनियम में तेजी देखने को मिला है. सो overall the metals behaviors are like this. We can talk more about it. So,
Yeah. So, thank you so much for very detailed input. This kind of situation, like supply disruptions and things happening there, what will be the impact on zinc and aluminum with respect to this? Also, do you think that there will be a sustained shortages in the coming time in these both commodities?
yeah, that's a very good point basically, Sutin. And especially अगर हम aluminium, if we talk about aluminium per se, as such, 2026 is perceived to have a bit of deficit for the overall supply of aluminium. Now, this Middle East concern has actually escalated this. People, as they get to see the Middle East concern in Iran or the other countries being affected, the neighbor ones, you see the exports of aluminum and aluminum alloys to the rest of the world. Around 20% of Europe and 22 to 25% of US imports from Middle East in the form of aluminum and aluminum alloys are especially from the Middle East only. And with this kind of disruption happening, the export markets are going to be tight from Iran to the Europe and US. We also import to the Asia, and India also imports a large amount of aluminum alloys from Middle East. So yes, with all these, we are going to see a supply tightness, and already the aluminum as a commodity was well supplied I mean, less of supply and more of tightness. Now, this event which has happened now is going to create more tightness, and that is making aluminum prices to move up. Generally, aluminum as a commodity do not move so much, and we have seen about $3,600, about
Okay.
$3,600, and we are seeing good amount of volatility. So, Neil, I think aluminum on a base case scenario, we should see for rest of 2026, which is another 9, 8 months from here, on to the higher side. We are aiming around $4,000 on a bull case scenario for aluminum, which is robustly higher from here.
Okay. Would like to read more, learn more from you about the next gold, copper, most discussed hot commodity. Delayed rate cuts, a lot of actions around it. Is there a structural bullishness in the copper still there, or the stories,
Yeah.
not there?
So basically, one thing that I am now putting an adjective to copper is that copper has become very resilient now. I mean, despite the risk off scenario, copper prices did fall along with the equity market or rising US dollar, and across other currencies have depreciated. But copper prices also fell from the highs of $13,500 to $12,600 very often, very recently. And but then, uh, if you look at the larger scale, the supply tightness continues to be there, and therefore, every time the copper prices declines below 12,500, $600, it quickly rebounds. So just quickly, if we assimilate the thought, now Chinese markets have reopened just 2 weeks now. So Chinese buying is relatively okay. If we look at the cathode imports from China, is actually good. So that means every time there is a drop in the prices, there is an impact, there is a interest of buying from China in terms of refined cathode. But in the meanwhile, if we talk about the raw material of copper that is concentrate, the demand is little muted from China. So all that I'm trying to say here is that every time there is a dip in the price, there's a quick rebound in the prices because of there's a buying interest coming in. However, uh, now, most of the discussion that is going on is that the exchanges warehouse in COMEX, LME, Shanghai, and MCX put together. Now, copper stock is around 1.32 million tons. So, in this year, now it is only 3 months of this calendar year. The inventory numbers at the exchange has been added by almost zero point 0.5 million tons. So now everyone is looking at key. There is a huge amount of inventory lying at the exchanges, but then copper is not making a huge drop, and the risk of situation should have actually made the copper prices decline substantially. In fact, I got to hear from the street that people were even talking about $11,500. The truth is that copper did not fall so much. So that means there is a resilience in the copper trend. Now, since that we are well within 13,000 range, and also to tell you, Swapnil, last 2.5 months, copper is trading in the range of $12,500 as a floor and $13,500 on the ceiling side, upside. So this range is maintained despite all these risk off situations. So we feel that the long-term fundamentals will actually play around, and 13,500 once that is clear off, then maybe we can see copper prices going back to $14,000. It is a matter of time. This risk of situation is actually keeping the copper price steady and stable in a range, but we feel that it can break onto the higher side.
Okay, so we spoke all the commodities, base metals, and now would like to understand that if this geopolitical situation persists, which is the most affected, which will be the most affected commodity, which will be the most affected metal.
Yeah. So what will happen is that, like we discussed, Swapnil, the impact is going to be felt across metals. But only thing is that we will not see homogeneity into the trend. So when I say homogeneity means everything will not just rise or fall. Generally, if this kind of war kind of situation, let's say, persist for another 2 weeks, assuming that it continues for another 2 weeks, now market will start discounting the factor. I mean, all of a sudden, we have heard a news yesterday from Mr. Trump stating that we will cool down the situation, will stop the war conditions and all stuff. But I am little susceptible to that kind of statement because the statements are varying very quite often. Today he would say that we'll stop the war in coming weeks, but then the wordings might change immediately. So that means we have to accept to the fact that we have to live in the situation where the vulnerability will continue. So now let's say if the war kind of situation continues and some situation persists, risk off will be there. So risk off, as we spoke about aluminum, we spoke about copper, we were to talk about zinc. So all the metals will move independently. So if this situation continues, so we'll be very strongly bullish on aluminum, like I mentioned. We aim to look at $4,000. If we talk about copper, copper will be volatile, both side movement, but every time there is a dip, we'll continue to buy. So risk off will be there, but it will be limited to decline. There will be concern to zinc, nickel, and lead. Lead is well supplied commodity. That is why it is not moving much higher despite the last several months. But this does not mean that lead to become superbly bearish also. It will become a little boring commodity. And zinc as such commodity, we might see short-term upside. I mean, it is trade another maybe $100 upside, but eventually it is well supplied metal, so it should come off. So to answer your question, Swapnil, on the last go, we'll continue to remain bullish on aluminum. Copper will remain vigilant but resilience also. That means every time there is a good amount of dip in the copper prices, we buy. And zinc, we are just limitedly looking upside. And lead will be quiet on the market. Yes.
Uh, So we have the levels now, we have the information that what is happening in the markets and what is expected to. So any one message which you would like to give to the physical market, hedgers, traders, how they should manage themselves? Any one message would you like to share?
Yeah, yeah, sure. I think the kind of volatility, Swapnil, that is happening in the market, volatility is way far higher than the historical volatilities. That
Yeah,
simple means that if you are naked in your positions, then your underlying has a risk. So,
yeah,
example, if you have bought copper and you have not hedged and you are carrying that risk very next moment. And
yeah,
second, if you are hedged, thinking that "Okay, I need to protect my margin, to on your hedge positions, you need to keep your liquidity ready for your working capital because the way copper or any other metal is moving, you look at yesterday to today, copper has moved up about $600 from the low. So
yeah,
if you are hedged on the short side, you need to maintain your mark to market for $600 per turn, which is
yeah.
huge. Similar lines for any other commodities, if you are a long risk holder or a short risk holder, your mark to market on your hedge position is something that needs to be managed very well with the enough of liquidity arranged. That's all I would like to say.
Thank you so much. It was wonderful talking to you. And I'm sure
Thank you,
your
sir.
knowledge will always help as it has helped in past. Thank you.
Yeah, thank you, sir. Thank you.